Starting January 2nd, a key Social Security update takes effect that could affect millions of seniors over 60. This change isn't about benefit cuts, it's about how your information is verified before payments are released. For those relying on Social Security, even a small delay or adjustment can create stress. In this guide, we'll break down exactly what's changing, who is most likely to be affected, and the steps you can take now to protect your monthly check. Beginning January 2nd, the Social Security Administration, SSA, will implement enhanced verification protocols designed to ensure the accuracy and integrity of benefit disbursements. These procedural updates are not related to reductions in monthly benefits, but are focused entirely on validating the information associated with each beneficiary account. The primary objective is to minimize errors, prevent overpayments, and strengthen the overall reliability of the Social Security payment system, which serves over 70 million Americans. The core of this update involves the expanded use of automated verification systems. These systems are engineered to cross-reference data across multiple federal and financial databases, comparing beneficiary records with external sources to detect inconsistencies. Key data points include personal identifiers such as name, date of birth, and social security number, as well as banking information for direct deposit, reported income, and Medicare enrollment status. The automated systems are programmed to flag discrepancies, no matter how minor, that may require further review before payments are released. For instance, if a beneficiary has recently changed banks or updated account numbers, the system may temporarily place a hold on a payment until the banking information is fully verified. Similarly, changes in income, particularly for those who continue to work part-time or seasonally, are compared against SSA records to ensure accurate benefit calculation. Medicare Part B premiums, which often adjust at the start of the year, are also monitored closely, as mismatches between expected and actual deductions can trigger a temporary review. It is important to emphasize that these verification procedures do not indicate wrongdoing or a loss of benefits. The majority of flagged cases involve routine updates or minor discrepancies, such as a bank merger affecting account numbers or a small income fluctuation. Once the system confirms the accuracy of the information, payments are typically released without adjustment. The strategic rationale behind this change is efficiency and accuracy. The SSA faces increasing operational pressures due to a growing beneficiary population, staffing limitations, and outdated technology. By verifying information prior to payment rather than after, the agency aims to reduce post-payment corrections, improve financial integrity, and streamline administrative processes. Beneficiaries can proactively mitigate potential disruptions by reviewing their My Social Security accounts in advance. Ensuring that all personal, banking, income, and Medicare information is current and accurate helps prevent delays, reduces administrative burdens, and provides peace of mind as these new verification measures take effect. Seniors aged 60 and older are among the most susceptible to delays or temporary adjustments in Social Security payments due to the enhanced verification protocols being implemented starting January 2nd. This susceptibility arises primarily from the complexity and longevity of their benefit records, which often include multiple changes over time, such as name updates, spousal or survivor benefits, and historical employment data. The accumulation of these variations increases the likelihood of discrepancies when automated systems cross-check information against federal and financial databases. One of the most common sources of delay involves direct deposit banking information. Seniors who have changed banks, merged accounts, or updated account numbers in recent years may have outdated information on file with SSA. Automated verification systems are designed to flag any mismatch between the bank details stored in SSA records and those reported through external financial databases. Even minor discrepancies, such as a missing digit or a previously closed account, can result in temporary payment holds until the information is verified and reconciled. This process, while brief, ensures that benefits are deposited accurately and helps prevent misdirected payments or potential fraud. Another significant factor contributing to delays is the presence of part-time, seasonal, or variable income. Seniors who continue working after retirement often have fluctuating earnings that may not immediately align with SSA records. Automated systems compare reported income from the previous year or current filings with internal SSA records to confirm eligibility thresholds and benefit amounts. If discrepancies are detected, the system may temporarily pause payments for review, even when the differences are minor or entirely routine. This ensures that benefits are correctly calculated in accordance with statutory rules governing earnings limits and taxation, maintaining program integrity. Longstanding beneficiaries are more likely to have multiple records that require cross referencing, such as Medicare Part B premiums, prior adjustments, and historical benefit updates. These overlapping data points increase the probability that automated verification will identify a mismatch requiring attention. While this may result in brief delays, it does not signify any error or loss of benefits. Rather, it reflects the system's heightened diligence in ensuring accurate disbursements. Proactive management of personal and financial records can mitigate these potential delays. Seniors are advised to review their My Social Security accounts, confirm current banking information, verify reported income, and ensure all Medicare deductions are up to date. By maintaining accurate, synchronized records, beneficiaries can minimize disruptions and facilitate smooth payment processing under the new verification protocols. At the start of each calendar year, adjustments to Medicare premiums can have a direct, albeit temporary, impact on the net Social Security deposits received by beneficiaries. Medicare premiums are deducted automatically from Social Security payments, and these deductions may change annually due to cost of living adjustments, income based premium calculations, or updates to coverage levels. For seniors, particularly those over 60 who rely on Social Security as a primary source of income, these changes can result in a noticeable difference between expected and deposited amounts, even when the gross benefit remains unchanged. The Social Security Administration integrates these premium adjustments into the automated payment system, but the timing of updates can create brief variances. When January arrives, the SSA cross-checks each beneficiary's record to ensure that the correct Part B premium is applied before releasing the net payment. During this verification, the system may temporarily hold or adjust a payment if discrepancies are detected between prior deductions and the current premium schedule. This is a standard part of the reconciliation process and is designed to prevent overpayments or underpayments to the Medicare program. It is important to understand that a temporary reduction or delay in a Social Security deposit does not indicate a reduction in the gross benefit or a denial of entitlement. The adjustment reflects the accurate application of updated Medicare Part B premiums. In many cases, the net deposit may appear smaller because the system deducts the new premium amount before releasing funds. For beneficiaries with income-based premium adjustments, these differences can be more pronounced, particularly if the SSA has not yet fully synchronized income records from federal tax filings or employer reporting. Delays can also occur due to the concurrent processing of multiple updates at the start of the year, including cost of living adjustments, tax withholding changes, and verification of reported earnings for those still employed part-time. Automated verification systems flag any inconsistencies for review, which may temporarily pause the deposit until all data points align. These measures are precautionary and ensure that benefits are calculated accurately and deposited securely. To mitigate confusion, beneficiaries are encouraged to review their My Social Security accounts before January 2nd. Confirming Medicare premium status, net payment expectations, and personal account information can help anticipate any temporary variations. Understanding that these fluctuations are part of standard administrative processing helps prevent unnecessary concern and provides clarity about the timing and composition of Social Security payments. Proactively reviewing your My Social Security account before January 2nd is a critical step in ensuring uninterrupted Social Security payments and minimizing the risk of avoidable delays. The Social Security Administration relies heavily on accurate, up-to-date information to process benefit disbursements efficiently. Any discrepancies in key personal or financial data can trigger automated verification flags, which may temporarily pause or adjust a payment until the issue is resolved. Seniors and beneficiaries with long-standing accounts are particularly susceptible to such delays due to the accumulation of historical updates, account changes, and varying income sources over time. The primary elements that should be reviewed include mailing address, phone number, direct deposit information, Medicare enrollment, and reported income records. Ensuring that your mailing address is current guarantees that official correspondence, including notices of verification or premium adjustments, reaches you promptly. Accurate phone numbers allow SSA representatives to contact you efficiently in the rare case that additional verification is needed. Direct deposit information must match bank records precisely. Even minor discrepancies, such as a closed account or a bank routing change, can result in a temporary hold on funds. Medicare enrollment status, particularly premium deductions, is another essential area to confirm. Annual adjustments to premiums or changes in coverage can affect net Social Security deposits, and the automated system cross-references this data before releasing payments. Similarly, accurate reporting of income, especially for seniors who continue part-time or seasonal work, is critical to avoid mismatches that could trigger temporary account reviews. Verifying these elements in advance allows the SSA's automated systems to process payments smoothly, reducing the likelihood of unexpected interruptions in January. In addition to internal verification, January is a period of heightened vulnerability to scams targeting Social Security beneficiaries. Scammers exploit the confusion that often accompanies early year changes, sending fraudulent emails, texts, or phone calls claiming that benefits are being suspended or that immediate action is required. It is crucial to recognize that the SSA will never demand personal information or payment authorization via unsolicited contact. Any legitimate verification or issue with benefits will be communicated through official channels, such as My Social Security account messages or mailed correspondence. Responding to fraudulent communications by providing account details or clicking links can lead to identity theft or financial loss. By maintaining current and accurate records in My Social Security and exercising caution against unsolicited requests for information, beneficiaries can protect both the integrity of their payments and their personal information. This proactive approach mitigates the risk of delays, ensures seamless application of updated premiums or income adjustments, and safeguards against fraudulent activity, creating a secure foundation for the new year benefit cycle. As January 2nd approaches, seniors receiving Social Security benefits are advised to implement proactive financial planning strategies to minimize the impact of potential delays or temporary adjustments associated with the new verification procedures. One highly effective measure is the creation of a small financial buffer, which can serve as a short-term reserve to cover essential expenses, such as rent, utilities, groceries, and medical costs in the event that a payment is delayed. Even a modest reserve of 1 to 2 weeks' worth of typical expenses can significantly reduce stress and provide continuity in financial obligations while any verification or adjustment processes are completed. In addition to maintaining a buffer, careful consideration of the timing of recurring bills and automatic withdrawals can help mitigate the operational impact of early year payment fluctuations. Seniors should review scheduled payments for mortgages, utilities, insurance premiums, and other automated deductions, adjusting payment dates slightly when possible to avoid coinciding with the early January period. Many service providers offer flexibility for due dates, and proactive scheduling can prevent overdrafts or missed payments, ensuring financial stability during the transitional period. Equally important is understanding how the Social Security Administration communicates legitimate issues. Any official notification regarding verification, payment adjustments, or required action will appear either through the Secure My Social Security account portal or via formal correspondence sent by mail. Beneficiaries should regularly monitor their online accounts for updates, particularly in early January, to remain informed about the status of their payments. This method of communication is the only official channel, and SSA will not issue notifications through unsolicited phone calls, text messages, or emails demanding immediate action. Awareness of these protocols is essential for avoiding fraudulent schemes that often target seniors during periods of administrative change. By combining proactive financial planning with vigilance in monitoring official communications, seniors can effectively manage the potential variability of Social Security deposits at the start of the year. A financial buffer ensures that temporary delays do not disrupt essential expenditures, while thoughtful scheduling of automatic withdrawals reduces operational risks. Concurrently, adherence to SSA's official communication channels helps prevent susceptibility to scams and ensures that any necessary actions are taken promptly and securely. Collectively, These strategies provide a structured and reliable approach to navigating early year Social Security processes, enhancing both financial security and peace of mind for seniors during the implementation of updated verification measures. Once a beneficiary's personal, financial, and Medicare related information has been verified, the Social Security Administration's automated systems function more efficiently, resulting in improved accuracy of payments and a significant reduction in future administrative delays. These systems are designed to cross reference multiple data sources, including federal employment records, banking institutions, and Medicare enrollment data, to identify inconsistencies before payments are released. By ensuring that all data points are correct and aligned, the likelihood of errors, temporary holds, or payment adjustments in subsequent months is substantially minimized. The automated verification framework serves several critical purposes. First, it streamlines the processing of Social Security disbursements by reducing the need for manual intervention. Historically, discrepancies or errors often required staff to conduct post payment corrections, which could take weeks to resolve. Automation allows the SSA to identify and resolve issues prior to payment issuance, enhancing both operational efficiency and the timeliness of benefit delivery. This preemptive approach is particularly valuable for seniors over 60, who frequently rely on predictable monthly deposits for essential living expenses. Furthermore, verified information contributes to a more accurate application of ancillary adjustments, such as Medicare Part B premium deductions, cost of living adjustments, and tax withholdings. When records are up to date, automated systems can calculate and apply these adjustments correctly, preventing situations in which beneficiaries receive unexpectedly low or high net deposits. This ensures that the intended benefit amount is consistently disbursed, maintaining financial stability for recipients. Beyond operational improvements, the verification process also has psychological and practical benefits. Beneficiaries who proactively confirm their account details gain confidence that their payments will be processed accurately, reducing uncertainty and stress associated with potential delays. This proactive verification fosters a sense of control and preparedness, allowing seniors to plan their budgets effectively and avoid unnecessary anxiety during periods of administrative updates, such as the early January implementation of new verification protocols. Ultimately, the combination of accurate, verified data and sophisticated automated systems creates a resilient payment infrastructure. For seniors, this translates into smoother transitions at the start of each year, predictable cash flow, and enhanced protection against errors or delays. Knowledge and proactive management of personal information thus serve as essential tools for optimizing both financial and operational outcomes within the Social Security program. By taking deliberate steps to maintain accurate records, beneficiaries benefit from both immediate peace of mind and long-term efficiency in their Social Security experience. By understanding the January 2nd Social Security updates and taking proactive steps to verify your information, seniors can avoid delays and ensure accurate, timely payments. Staying informed, maintaining current records, and monitoring official communications empowers you to navigate these changes confidently. With preparation and vigilance, your benefits continue uninterrupted, giving you peace of mind and financial stability as the new year begins.